Welcome back and thanks for joining us on Wednesday night. Quick one, JB Hi-Fi, we've talked about it many times. You made a lot of money out of it a couple of years ago. It's fallen, it's back down at $16.50, and I know a couple of other brokers have put it back on their radar recently.
Sure.
Where are you back on that now?
Yeah,
are you back on a buy now on that, or?
Yeah, look, we're taking an active interest in this company. We're researching it right now.
Yeah.
What we're interested in is collecting all the information we could possibly get on how the online, the advent of online retail is going to actually affect them, and what their planned response to that is going to be. Because at the moment, if you look at their online response, you know, there's been some improvements recently, but up until recently, it was pretty much the brochure, you know, the flyer that goes out in the mail online, and that's not enough to actually win back market share.
Okay, good stuff. Thanks for that, boys. Sorry, Stephen, thanks for waiting on the line from Melbourne. What's your question for us tonight?
Good evening, Chris and panel. My question tonight is on MTU, which is M2 Telecommunications. Just a fundamental view on them, thanks.
Okay, listen, thanks very much. M2 Telecommunications, I'm sorry, not one of mine. I wish it had been. By having a look at that chart there, it looks absolutely fantastic. Ben's looking a bit squinty though. Is that one of yours, mate? We've done Telstra 50 times, but...
I think, Roger, you followed this one, haven't you? Here's the short one.
We own it.
Oh, you own it? Oh, okay, well, there you go. It's made for you, this question, then.
We've got intrinsic value rising to about $4.50 in 2013, $4.15 next year, and we like this particular business. I have some friends in the telecommunications industry, very senior people in the industry. They have expressed to me some concerns about management, but personal differences amongst managers of telecommunications companies, I think that's par for the course. I'm more interested in the economics of this business, and thus far, I like it, and I think they may get a step change if there's a recovery in the economy as well.
Okay, good stuff. No trouble. We'll go to Thomas from Summerhill. Hi, Thomas. What's your question for us tonight? Hello, Thomas. Thomas, can you hear us? I don't know whether Thomas can hear us, I'm sorry. We're going to move on to an email quickly. This is from Steve from Port Macquarie. Can he please ask the panel their views on Centro? Have they turned the corner? My gut feeling tells me that they have, and that's served him well in the past. What are our thoughts? Look,
Steve? Is that Steve?
Yes, I think it was Steve. I think it was Steve. So, because I know that...
If Steve's gut feel works for him, I don't want him to come on the show. I want him to come to my office.
And see if he can help out.
We'll just set him up at the office. And
I don't know if you could actually work out what the percentage was, though, over a period of time on the gut feel.
I've got a couple of thoughts on this. I have colleagues in the funds management industry who have told me, Roger, you should be looking at this particular sector. When I look at it on my metrics, I can't see anything that justifies a purchase. But I've got people who I work for in property development and very senior in property development and have been in it for a very long time, who tell me they believe cap rates are still too high and need to come down. My own thoughts, I like industrial property the most. Why? Because I think there's more value in the land than in the buildings. I like office property the least. I would be happy with retail and commercial, but I don't think, I think the long-term trend for returns out of commercial property are actually going to decline, because I just think there's going to be an awesome amount of competition coming from the online space. And that means that the revenues aren't going to be, the revenue growth's not going to be there for retailers. So the likes of Westfield, Westfield I haven't thought about buying for a very long time. So they're my thoughts. I just don't see any value there at the moment.
Well, it's come up a couple of times now in retail and now in property as well, this online space and how much that's going to take over from multiple different areas.
Well, look, and to be fair, people do jump at shadows in this, so it's not like the end of the world. But I like to think of it as you hit the blend button on a blender, the pulse button on the blender, and when you're making a milkshake, it all blends up, and then you've got to see how it settles again. And we just don't know how it's going to settle and what sort of rates landlords are going to be able to achieve.
All right, good stuff.
I've got a couple of questions. The first one is about Oroton, ORL. I know Roger had a lot of good things to say about it a few months ago, and I haven't sort of checked into the program too regularly, so I'm not sure if you've covered it more recently. But I'm just wondering what you're thinking about the stock now, if it's come down quite a lot. And my second question is more general concerning mining services and infrastructure, whether you've got any recommendations for particular stocks in that sector.
Yep, certainly. Great. Thanks very much for your question, Thomas. Look, we'll go start with Roger on Oroton, and then we'll move on to mining services after that.
Oroton looks cheap at the moment. I've got its intrinsic value rising over the next couple of years by a fairly good clip. In fact, I've got it rising by about 12% a year for the next couple of years, and I've got it valued currently at $7.77, which is about a cent or two away from where it's trading. So it looks cheap compared to 2012 and 2013.
Okay, no worries. Now, mining services, Ben, something we discussed multiple times, and I know Roger's got a couple of good ones as well.
Our favourite at the moment is Matrix Composites and Engineering.
Yeah, well, you've made good money out of that for a while, haven't you?
We have.
Yeah.
It went up a long way.
Yeah.
One of the things that we're going to keep a very close eye on is their cash flow when their full year report comes out. We want to make sure that they've received some deposits and got some orders.
Yep.
That's important for us. Forge is another one that we liked.
Yep.
Clough have a big stake, a cornerstone stake in the company now, and that relationship was supposed to be able to lift the size of the typical customer that Forge could actually win contracts from.
Yeah.
I'm concerned that doesn't appear to have happened yet.
Right.
But these are short-term concerns, not necessarily long-term concerns. Keep a very close eye on these companies. You've got to look at them and you've got to understand them, because some of them are very capital intensive. Marine services, for example, extraordinarily capital intensive. Engineering, there's some good ones and there's some bad ones. There's just so much variety within this particular space. It's hard to actually just put a blanket statement out about mining services. You've really got to look at individual businesses.
Fair enough. Thanks for that, boys. We've got Gardy on the line from Sydney. Hi, how can we help you?
Hi there. I would like to ask Roger what is the intrinsic value of a Big Air? The code is BGL, and what he thinks about this company.
Okay, thanks very much for your question. BGL doesn't ring a bell to me. I'm sorry.
Well, they're a fixed wireless broadband provider.
Yep.
They're in a lot of there's a lot of talk going on. I've got a blog. At rogermontgomery.com, blog.rogermontgomery.com, and lots of people are talking about this particular company.
Right.
I suspect many people on my blog actually own this stock.
I apologise, I didn't check today.
Yes, well, I won't hold that against you, mate. We're all very busy professional
Tomorrow
people.
I will, though.
Yes. So a lot of people are interested in this. My valuation for this particular company is higher than where it's trading.
Yep.
I don't buy into this idea that they're pioneers in their industry or they're doing anything remarkable. I also worry that Telstra, with their 4G network, which they could switch on at a moment's notice, and they could also cover 10 million people just in a trial. The only thing stopping them is handsets,
yes.
And it's a full IP network. I think that could actually that would actually stop Telstra needing to buy Big Air. There's some talk about a takeover.
Yep.
There was some reports about Vocus buying this particular business. Vocus may buy Big Air.
Well, Vocus has been a good win, so
I don't think there would be universal agreement. There would be universal agreement amongst executives in telecommunications that this is a great business. The Clever Communications business that they bought, I don't think that's a particularly outstanding business. I don't know about the track record of the people who previously ran that business and owned it. I have some questions about management's ability there, and so I'm cautious on it. Having said that, I do own Big Air. I do own some shares. I think there could be a takeover of this particular company.
Yep.
I don't think necessarily it'd be a great strategic move, but it does seem to be cheap.
Fair enough. Thanks for that, Roger. We've got Sandy waiting on the line from Canberra. Hi, Sandy. How can we help you?
Oh, hi. I was just after the panel's view on Data3 and where they would see a good buy-in level.
Okay, listen, thanks very much. Did you have a look? Yep, like it. It looks okay.
Like the company, intrinsic value is rising. It appears to be cheap.
Okay, great. Listen, thanks very much for that, boys. Okay, guys. So